Will Drone Delivery Canada be the company to capitalise on a $29 billion industry, with a contract already signed with Air Canada offering a huge income stream? Let's dive into it. I love this company. Drone Delivery Canada, or TAKOF, is a drone company with patented products and feet in a multitude of segments revolving around the large scalability of drone delivery for the future. Based in Canada, obviously, DDC is a drone manufacturer and AI-augmented company that focuses on capitalizing on healthcare, remote communities, airports, oil and gas companies, mining companies, couriers, logistics, and industrial commercial companies, all of which have stated that they are already becoming reliant on drones as a form of service for delivering goods. Drone Delivery Canada seems to be well positioned to capitalise with tested, proven and reliable technology, in addition to patented intellectual property, and they have a committed and seasoned management team, with each one having a tie to an incredible player within each industry.
Coincidence? I think not!
And these ties have already paid dividends, with Vice President Steve Bogie being a recent addition to the team and recently working with Air Canada.
Coincidence? I think not!
Now, if you know me from the Discord, shameless plug, you know I love a good management team. It's what got me a great price on ABML, on OEG, and a lot more. So seeing that DDC are imploring the same narrative really makes me bullish on this company. So what deals do they have? Well, they've entered into an agreement with Air Canada, with which Air Canada Cargo will market DDC's drone delivery service in Canada, and that gives them the logistics community access to the growing potential of commercial drone deliveries. This gives us a potential 150,000 air routes for them to capitalise on, and we can break down the maths for how these routes can be utilised and monetised like so. Just as some basic evaluation, as the company is still growing and their notable revenue stream is through air routes, assuming outstanding shares are 210 million and the current price is $1.06, press releases have revealed that routes will generate between 15,000 and 25,000 each, depending on the drones used. Every 1 billion in valuation will equal another $5 in share price. So a $1 billion valuation will be $5 a share, 2 billion being $10 a share, and so on and so forth. And this is just through air routes as a form of income. If this new market were to command 20 times revenue valuations, then 250 million in revenue should equal about a $5 billion valuation. So if the average route brings in $20,000 a month, just over 1,000 routes would equal 250 million in revenue. So the scalability of this form of income is in fact incredibly lucrative, especially when Air Canada offers over 150,000 of these routes. Of course, in theory, they'll only be able to capitalise on an amount of these, but that's an incredible opportunity for them to grab. So what problems do the company have? Well, one of the bigger concerns that I have for them is that they aren't making an incredible amount of profit right now in comparison to their market cap. And although they have plenty of cash on hand, they do seem to be burning through it in an attempt to innovate and make ties within their preferred sectors. There is the glaring fact that it is in fact still a penny stock also. I personally class anything below $5 as a penny stock due to the fact it swings so violently based on volatility, and you need to keep in mind that hype will be a major factor as to why it is running right now. I do, however, believe it is still undervalued, which is why I still recommend it as an incredibly strong company. Simply Wall Street thinks that the stock is currently 72% undervalued, and in the company report on my Discord, we think the fair value is around $3, with a long-term prediction of around $15 to $20. But what is it going to be that pushes the stock long-term? Well, we want to see news about recurring contracts. We want companies trying the service and coming back for more. We want to see the air routes Air Canada have access to being leveraged and utilised for the income they can provide. And we want most importantly to see the innovation continue. Recent news has been a little scarce, but we've seen some important strengths in the stock. They got put into the OTCQX top 50 companies for revenue-based logistics. They added an industrial market segment expert to their board with links to mining and oil companies, and they announced a further expertise in their AI segment, which is where real plays can start being made. This is all very progressive and impressive news that isn't catalyst based but strength based. Everything I mentioned will help the company unimaginably in the long term, which is what I am in the stock for. Once again, I'd like to thank everyone for watching. These company reports may be short, but I edit them myself and try to make it aesthetically pleasing and precise as possible. So if you wouldn't mind leaving a like and a subscription, I would be over the moon. We have a Discord to share knowledge. If you'd like to join, please do. And that's me, DD-Bae, signing off.